Good morning, I'm Peter Milios from the Finance News Network. Stocks moved lower on Thursday, shrugging off a fresh round of inflation data that reflected an uptick in consumer prices for December. The Nasdaq Composite closed a flat line. The Dow Jones Industrial Average eked out a gain of 0.04%. The S&P 500 edged lower by 0.07%. Earlier in the session, the broad market index briefly traded above the record closing high of 4,796.56. December's Consumer Price Index report came out slightly higher than expected, reflecting a 0.3% increase in consumer prices for the month, pushing the annual rate to 3.4%. Economists polled by Dow Jones had predicted that the CPI rose 0.2% in December and 3.2% on a year-over-year basis. Core CPI, excluding volatile food and energy prices, came out in line with expectations, however pointing to a persistent yet easing inflation pressures. The data released on Thursday suggests that future interest rate cuts may be slower to come. Yields rose on the back of CPI data, with the yield on the 10-year Treasury note last trading at 4.045%. Thursday's sell-off is, in part, influenced by tempered expectations surrounding the Federal Reserve's rate cut timeline, as well as earnings jitters, according to CFRA Chief Investment Strategist Sam Stovall. This week is kickstarting the fourth quarter earnings season, with banking behemoths Bank of America, Wells Fargo and JP Chase set to report results Friday or tomorrow. Elsewhere in Thursday's market, Bitcoin ETFs rose on their first day of trading as crypto prices also edged up. Bitcoin briefly hit the $49,000 mark early on Thursday before falling to just above $46,000. The moves follow Wednesday's approved rule changes from the US Securities and Exchange Commission, which opened the door for Bitcoin exchange-traded funds and expanded investors' access to the flagship crypto. Stocks are coming off a winning session, with all three major indexes rising on Wednesday. Microsoft briefly overtook Apple as the world's most valuable company due to Apple's weak start to the year, reflecting concerns over demand. This shift highlights Microsoft's faster growth and its potential benefits from the generative AI revolution, according to analysts. Additionally, Hertz's decision to sell a third of its US electric vehicle fleet and reinvest gas-powered cars signals warning demand for electric cars in the US, while reliance of mega-tech companies like Apple, Amazon, Google and Nvidia on Taiwanese manufacturers for over 90% of their semiconductor chips poses a key geopolitical risk this year, as noted by Bank of America's Research Investment Committee. Turning to US sectors, only tech, energy and financials closed higher overnight. Utilities was the worst performer, falling by over 2%. Turning to Asian news, the Nikkei 225 index closed above 35,000 for the first time since 1990, and the Topix index ended 1.6% higher, as Japanese shares rallied with a 1.8% gain. Bank of America and Goldman Sachs anticipate further gains in the Japanese stock market, driven by a weakened yen compared to the US dollar, which has bolstered export-related companies such as Hitachi, Toyota Motor and Sony. Looking ahead to the Australian landscape, the SPI futures are pointing to a 0.45% fall. Thank you for listening.